All right, what's up, everybody, and welcome back to another Monday here in the crypto market. Well, I wanted to use today's video to discuss with you all what we are currently seeing on the crypto liquidation maps. Because as someone who has been studying these maps every single day for like 4 years, 3.5, 4 years straight now, I can pretty confidently say that the setup that we are seeing in the crypto market right now is one of the craziest that I've ever seen. And I believe that sends massive clues and signals to what we can expect from the crypto market going into the foreseeable future. Okay. So I think this is very important. And so what we're going to do is discuss everything. We're going to first and foremost talk about what the liquidation maps are for those of you who are new to them. Then we're going to talk about why this setup is so crazy, what it can mean for the crypto market and Bitcoin's price going forward, and how that then translates to the moves that I'm making in my own portfolio and my own positions as a result of what we're seeing. So we have a lot to get into today, and I don't want to take too much of your time on a Monday. So let's go ahead and let's jump straight on in. So first and foremost, let's talk about what these liquidation maps are. And if you already know what they are, use the timestamps down below and you can just jump ahead real quick. So when it comes to the liquidation map, again, for those of you who are new to it, the liquidation map is simply just a tool that gives you the ability to see when traders will be liquidated. And if you don't know what being liquidated as a trader means, it's very simple. Okay, let me give you a hypothetical. Let's say you're a trader and you're trading on an exchange and you decide that you want to take a risk. You're like, you know what? I only have $100, but I want to trade with more than that. I don't have any more money. So what I'm going to do is I'm going to go to the exchange that I'm trading on and I'm going to borrow some money from them. Let's say I'm going to borrow $1,000 because I want to bet that Bitcoin's price is going to go up. And I'm so confident that it's going to go up that I'll put up all this collateral, all my $100, for example, worth of collateral to go borrow this money from the exchange to make this bet that Bitcoin's going to go up. Well, the exchange will they'll let you borrow that money from them, but they'll tell you, hey, we hope you're right. Wink, wink. But if you're wrong, say by 10%, Bitcoin goes down 10%, we're going to take all this money that we let you borrow from us back, and we're going to take all this collateral that you put up as well. And that is called being liquidated. And so you can use the liquidation maps to see at what point traders will be liquidated or so wrong that they lose everything that they put up for all the money that they borrowed. Now, I know you may be thinking, why is that important? That's super random. No, it's actually extremely important because I believe, and many other people believe as well, that this market is very manipulated. It is very corrupt. And if you're new here, sorry to break the news to you. And because of that, many of these centralized exchanges and market makers, liquidity providers, etc., move this market in the direction in which the most traders will be liquidated because they make money when traders lose. They make money when traders are liquidated through liquidation fees, through higher spreads, through counter trading, and much more. And so what we've come to realize through analyzing this maps for the last few years is that if you know where traders will be liquidated, you can usually get an idea of where the price of the market itself is likely going to go at some point. Now, it's not always 100%, and it's not always guaranteed. We've seen moments in which, of course, a lot of people will be liquidated if the price goes up, and it just keeps going down, right? So it's not 100% guaranteed, but it's very important to watch. It's one of the most accurate tools, I would say, in all of the crypto market. And so when you're looking at this tool itself, what you're seeing is actually pretty simple. You see this red line right here? This red line represents Bitcoin's current price, okay? And this is the Bitcoin chart we're looking at. This is Bitcoin's current price, is $63,700. Anything to the right side of Bitcoin's price is its price going upwards, okay? So 64, 65, 66, 68, etc. Anything to the left of Bitcoin's price represents its price going down. These are all prices currently below Bitcoin's price. And these bars represent how much money in liquidations are available at each price. So for example, if I was to hover over, let's go to $66,700, what you can see is that at $66,783, or another way to word it is that if Bitcoin's price goes up to $66,783, there would be $3.58 billion worth of total liquidations that will occur. Or the way that you would actually word it is that $3.58 billion worth of liquidations are available at $66,783. Okay. And so in theory, what you can do is say, okay, this is Bitcoin's price. To the right is up, to the left is down. Which direction has more liquidations? Will more people be liquidated if Bitcoin's price goes up? Or will more people be liquidated if Bitcoin's price goes down? Because if this market is as manipulated as we think it is, which I'm very confident that it is, you can get an idea of where the market is likely to go over the long term. And so what you can see in this current situation is that at the time of recording, there are way more liquidations that will occur if Bitcoin's price goes up than if Bitcoin's price goes down. And if you want a cheat code, just look at the green line. The green line represents total liquidations to the upside. The red line represents total liquidations to the downside. So that's what the liquidation map is. So again, let's now transition into what all of this means for the market right now. Because what you can see is that at the moment, this is a huge imbalance. Typically the market looks a little bit like this. On the 1 day, let's try the 7 day maybe, something like this, right? Where it's a little bit balanced. Like, yeah, the green line will either be higher than the red line, or the red line might be a little bit higher than the green line, but it's very uncommon that you see a massive imbalance like we are currently seeing right now. And what you can see from the 1 year time frame, meaning these are all of the current available leveraged positions that have been opened over the last 365 days, is that there is substantially more people who will be liquidated if Bitcoin's price recovers up towards, say, $88,000. To put real numerical value behind it, there are $23 billion worth of liquidations available if Bitcoin's price goes up to $88,000, compared to only $2.6 billion towards $52,000. Guys, we're talking a near 10-to-1 spread between the upside and the downside. That is wild. To put this into perspective, I have only seen as high as a 7-to-1, where the upside swing is about 7 times larger than the downside swing on the 1 year chart. A 10-to-1 is insane. And what this means is that over the last 365 days, way more people are betting that the market will go down than that the market will go up. That's all that means. Everyone's betting now on leverage that the market's going to go down, then that it's going to go up. And of course, that's represented because if Bitcoins go up, they'll be liquidated, right? So they're betting it's going to go down. So if it goes up, they get liquidated. So that's how you know with the green line that they're betting it's going to go down. So what does this mean for the market going forward? So we know that this is one of the craziest differences and imbalances that the liquidation map has ever shown before. What does this mean for the market? Well, what I wish it meant was that Bitcoin is for sure going to go up, right? That's what I wish that it means. That's not what it means, though, because realistically, Bitcoin, in essence, can just keep going down. And this imbalance can keep getting bigger and bigger and bigger. And the reason why I wanted to clarify that is because you're going to see a lot of people who just started using the liquidation map make posts on X, make posts on YouTube, make posts on Instagram or Facebook or whatever they post on, right? Saying that this is the biggest imbalance that the crypto market has ever seen on the Bitcoin liquidation map. So therefore, Bitcoin's about to go up. It's not how that works. It's at a 10-to-1 now. It could just end up being at a 15-to-1. It could end up being at a 20-to-1. You never know how big this can get, right? We could continue to see Bitcoin's price go down and down and down. More and more people start opening up short trades, which means they're betting that the market's going to go down. And next thing you know, we're seeing it at 50 billion to the upside and only 4 billion to the downside, right? So I don't want to try to sit here and convince you that the market's about to go up. But what I do want you to understand is that eventually it is going to, and it is going to be violent, and it is going to be one of the craziest reversals that we've probably ever seen before in the crypto market. I do genuinely believe that. Because when the market is capable of seeing billions, $25 billion worth of liquidations, you bet your butt that those lizard people, those market manipulators, they're looking at this like, ooh, whoa, we can make so much money on spread, so much counter trading, so much liquidation fees if we let this market go back to the top side. So you bet that at some point, this market, straight back up towards the upside, and it gives you those gains. And that's a great sign, right? That's a great sign for us here on this channel, because I've told you all consistently that I believe that the crypto market and Bitcoin is entering into what is called the buyer's portion of the bear market. I believe bear markets are divided into two pieces: seller's portions and buyer's portions. And it's simple to understand. The seller's portion of the bear market is when it just makes sense to be selling. It just makes sense to be getting out. The buyer's portion means it makes more sense to be buying than it does to be selling. And one example that I always give you guys is the previous bear market. We go look back at this previous bear market, and this portion right here was the obvious seller's portion. This was the time to be getting out. Once we started entering into this phase down here, this was more of the buyer's portion of the bear market. And there was a bit of a transition phase where it was about a 50-50, right? This little transition right here. But I believe we are getting closer and closer towards the buyer's portion of the bear market, meaning that I am expecting not that Bitcoin's going to bottom now, but that it's going to bottom sooner than people expect. And I've laid out my phases for where I think that's going to happen. I've given you phase 3, phase 4, and phase 5. These are the 2/3 more phases that I think Bitcoin could interact with before creating some sort of bear market low and giving you a rally back up towards those highs. And the fact that we are currently seeing the liquidation map telling us that at some point Bitcoin's going to make a nasty run upwards and smash through liquidations, I think it further validates that what I'm saying could very well be true. And again, I'm not saying I'm right, and I'm not saying you should do any of the things that I'm personally doing, but this just further validates my opinion that we are entering into the buyer's portion of the bear market because everyone is betting that the market's going to go down, and the market almost always does the exact opposite of what everyone thinks it's going to do. I love to see this happening as a buyer, and I think this is a great sign. So how does this translate into what I'm doing? Well, it gives me further incentive and motive to keep doing my game plan. As you all know, my game plan is this. I laid out 6 phases, phase 1, 2, 3, 4, 5, and the buy as much as I possibly can phase. Okay. And these are, of course, the phases in which I'm going to be buying in my long-term portfolio and also building up my leveraged long positions. And my whole game plan is to buy in bigger sprees the lower it goes. So for my leveraged positions specifically, I allocated 2,000 to phase 1 because I wasn't very confident that it was going to hold. I allocated 4,000 to phase 2 because I was a little bit more confident that it could hold. I allocated 10,000 to phase 3, 12,000 to phase 4, and $14,000 to phase 5. That's to build up a leveraged long position here in the bear market. And I'm not going to get into that whole theory or that thesis that I have there. I've explained that many times on the channel. But my whole point in saying this is that I'm accumulating more and more the lower that we go. I'm building larger positions the lower that we go. And this news, this thing that we're seeing right here makes me more and more confident that this is the right plan for me because I just feel like I'm going to end up building into some fantastic bear market positions that when the next bull market comes around, because it will eventually, I am in a great position to make hundreds of thousands of dollars in gains. That's my goal. And that's why this is so dang important. This doesn't happen often, and that's why it's so dang important. And so obviously I will keep you updated as it all plays out. And truth be told, I know not all of you want to, trade in this and buy in this. And you don't have to use today's information that you just gathered about the liquidation map to do anything. That's not what I'm telling you. But it is worth knowing because while everyone is calling for the end of the crypto market and that crypto is going to go down to 10K and 20K, the liquidation maps say that this thing is spring loading for some sort of reversal at some point. The question is, where does it happen? Does it happen in phase 3? Does it happen in phase 4? Does it happen in phase 5? I don't know, guys. Okay. I don't know. But what I do know is no matter what, the lower we're going, the more I'm accumulating because I'm getting confident that I might be right. All right. So I'll keep you updated as it all does play out. If you are also trading in this, I will let you all know that there is, of course, a link down below to BTCC. I'm building out long-term long positions. And so I needed a platform that would give me good funding fees because if I'm holding this for, it might take me 6 months to a year for these positions to be profitable. I knew that, right? And so if that's going to be the case for me, I needed a good platform to do it on. I decided to do it on BTCC because you can get up to 40% in lower trading fees, which makes this obviously much easier. So that is linked down below for you. Anyone who trades knows how insane that is. And you can also get up to $10,000 in deposit bonuses and up to $13,000 in volume bonuses. So a ton of great stuff is available for you there when it comes to BTCC and where you can trade. And it is always a link down below to I Trust Capital as well, which is for those of you who aren't trading. You're just holding your money and holding your crypto for the long term. This is a retirement platform. So you can hold your crypto there, generate gains over the next, however many years it may be for you. And then of course you can get tax-free profit, which is huge because that can save you up to 30, 40% of the total profit that you generate. This is absolutely amazing. Anyone who's holding crypto for the long term should consider a retirement account at some point. So I have one link down below for you. You can get up to $100 in funding bonuses if you use my link down below and actually fund an account. Okay. So both of those things are available for you down below. But all in all, I'll keep you very updated as this plays out because this is a massive imbalance and it's worth watching. I'll see you all in the next one.